In this video, I'm going to show you everything you need to know about the head and shoulders pattern. We're going to open TradingView and spot some real-life examples of this pattern together on different stocks and cryptocurrency charts. We're also going to dive deep into the meaning of this pattern from a price action standpoint, so that by the end of the video you'll have a deep understanding of this pattern and you'll be able to spot it and trade it by yourself. Last but not least, I'm also going to show you the most common mistake that traders make when trading the head and shoulders pattern, so that you can be aware of that and avoid making the same mistake. So make sure to watch this video till the end, like, and most importantly subscribe to my channel, as this is one of a series of videos about chart patterns, and if you activate the notification bell you will get notified every time a new tutorial about chart patterns comes out. And without any further ado, let's dive straight into the content. This is the anatomy of a head and shoulders pattern. Left shoulder, head, right shoulder, neckline. The breakout of the neckline completes the pattern and confirms the reversal from an uptrend to a downtrend. In the real world, head and shoulders patterns won't be that perfect. They will look more messy and they will not follow the pattern requirements exactly. But if you can spot the four elements that I've just shown you, you'll be able to identify real-world examples of head and shoulders and trade them with confidence. So let's check this pattern in real-life charts, and let's start with the Delta Airlines stock. As you can see here, we have a head and shoulders pattern, which is characterized by a first reversal point, which is known as the left shoulder, a second reversal point and swing high, which is called the head, and a third reversal point and lower high known as right shoulder. We also have two same reversal points which form a support known as the neckline. But what does this pattern tell us from a price action standpoint? The right shoulder fails to make a new higher high and forms a lower high instead, showing a loss of momentum from the buyers. Once the neckline is broken, the price forms a lower low and the pattern is complete, confirming the reversal from an uptrend to a downtrend. As you can see, this real-life head and shoulders pattern looks pretty different from the theoretical and perfect head and shoulders that I've shown you at first. In the Delta Airline price chart, the price touched the neckline 3 times instead of 2. This of course does not invalidate the pattern, as the 4 key elements of a head and shoulders are still there. I'm going to show you even more imperfect examples of real-life head and shoulders to help you identify this pattern without getting confused by its imperfections. So let's now check the Bitcoin price chart. Here again you can clearly see how the price was following an uptrend, and we formed a higher high here, which is our first reversal point and left shoulder, a second higher high here, which is the second reversal point and it's called the head, and a first lower high here, which is the third reversal point and our right shoulder. When forming the right shoulder, buyers show signs of weakness, as the price fails to form a new higher high and forms a lower high instead. And when we finally break the neckline, the price forms a lower low. At this point, the reversal is complete and the trend changes from an uptrend to a downtrend. How to trade this pattern breakout? You enter a short here once we see a candle close below the neckline, and we take profit at the profit target, which is calculated by measuring the distance between the head and the neckline and moving this line to the breakout point. Let's now see what happens if we invert this pattern by flipping on its head. This is the inverse head and shoulders pattern. Left shoulder, head, right shoulder, neckline. The breakout of the neckline completes the pattern and confirms the reversal from a downtrend to an uptrend, exactly the opposite of the classic head and shoulders pattern. Let's open some real-life examples. This is the Bitcoin price chart again, and what you can see here is an inverse head and shoulders pattern that shows a big reversal from a huge 1-year-long downtrend to a new uptrend. The first reversal point here is the left shoulder. The second reversal point and swing low is the head, and the higher low reversal point here is the right shoulder. The two same high reversal points here make a resistance level, which is the neckline. Once the price breaks the neckline and forms a higher high, the pattern is complete and the reversal from a downtrend to an uptrend is confirmed. So what does the inverse head and shoulders tell us from a price action standpoint? This pattern shows a loss of momentum from the sellers, as the price fails to form a new lower low and instead forms a higher low, showing the beginning of a trend change. As you can see, after the breakout of the neckline, the price forms a new uptrend with higher lows and higher highs. How do you measure the price target of an inverse head and shoulders pattern breakout? You just have to measure the distance between the head and the neckline, and then move this line to the breakout point, and this gives you your take profit level. As I promised you, I'm now going to show you the worst and most common mistake that I see traders making when trading the head and shoulders and the inverse head and shoulders pattern. As you can see in this same Bitcoin price chart, the price corrected after the breakout, touching the neckline and then bouncing on it to finally continue the uptrend. Many beginners traders get scared when they see the price correcting after the breakout and they exit the trade before reaching the price target. When the price corrects after a breakout and touches the neckline again to get a bounce, this is actually confirmation of the breakout, so you shouldn't exit the trade after breakout even if the price corrects, unless the price falls below the neckline. The neckline over which the price bounces actually represents a perfect entry price for a long trade, so you can either enter your long position at the breakout or after a bounce on the neckline. For example, if you were sleeping during the breakout and you missed the trade, if you see a correction and the price touches the neckline, you now have a second opportunity to enter a long position. This is all for today, and if you want to learn how to trade more patterns, you can start by watching my video on the ascending triangle, which you can find right there. And if you got some value out of this video, then like it and subscribe to my channel, as I'm going to share more videos on chart patterns in the next weeks. And that being said, I wish you good trading and see you in the next video.